Hello, we are letting AI make life-changing financial decisions without requiring it to explain itself. In 2026, the CFPB says we lack sufficient information is no longer an acceptable reason to deny someone a loan. The AI Act around classifies credit scoring as high risk, and more than half the US workforce, gig workers, fractional leaders, solopreneurs, is still being scored by models built for a 1950s economy. It's hard to believe. Today's guest has lived this gap from both sides. As a journalist who exposed how institutions resist AI accountability, and as a founder building the fix. Welcome to Data Science with Sam. I'm your host, Sam Day. My guest is Tamara Laine, founder and CEO of MPWR AI, an Emmy Award-winning investigative journalist turned technology executive. Her reporting on ethical AI at companies like Amazon and Northrop Grumman earned her an Emmy Award. Her work at MPWR has earned her a seat in the financial sandbox. MPWR runs 6 policy-bound AI agents across the lending lifecycle. Every decision's explainable, auditable, and governed by the lender's own credit policy. Tamara, welcome to the show. I'm very excited to continue this conversation over this episode.
I am excited to have this conversation. In fact, it's one of the hot topics that I've been discussing not only in person with lenders, but on social media. It's been the questions that I've been fielding right now.
All right. I feel like this is definitely get my listeners excited. But before I jump onto the Q&A section, I would like to remind my listener, if you like this episode, please don't forget to like, comment, and subscribe to my YouTube channel, and also follow Data Science with Sam on all audio podcast platforms such as Apple, Spotify, iHeartRadio. All right. So Tamara, I want to start with your journey because it's genuinely unusual. And I don't think the connection is obvious until you hear it from you directly. So your path runs through professional ballet, documentary filmmaking, Emmy-winning investigative journalism, and now fintech. What's the connective thread? And was there a specific moment, maybe reporting on AI ethics at companies like Amazon, or hitting your own wall as a gig worker who couldn't get a credit card despite a 6-figure income that convinced you to start MPW?
Yeah, I mean, the answer is yes to all of that, but I should give a little bit more explanation. So, I often get asked the question, I don't have a linear journey into becoming a fintech founder. And the answer is yes. And that's good, right? If we had people solving problems from inside institutions all the time for the majority of the economy, society, then you would never have disruption and you would never have answers that are solving a problem that people actually face, right? And so I have spent time inside the financial industry. I was a financial news anchor for a while as well. And so my journey, when you actually think about it, makes a lot of sense. As an investigative news journalist, my job was to solve problems. It was to spot problems, to spot trends that affected people, to find the people that were then solving that or challenging the system or creating change, and to put that together into a story that highlighted what was being done. Then, as a tech founder, my job is to spot a problem. And it is to find the people that can come around, that have the expertise to do it, and to lead that so that a solution is made that helps people. So when you draw that line together, the journey makes a ton of sense. It's the exact same thing that I've been doing year after year, time after time, and seeing results. And so now what I'm thrilled about was when I was a journalist, I got to go into the trenches. I got to help people, political corruption, environmental catastrophes, people that were being evicted from their homes by unfair landlords, and I would be able to give voice to those who did not necessarily have a voice, or dignity and opportunity to those that were not being given the fair access and the opportunity to solve a problem. Now I get to do that same thing through a technology that I'm creating. And once you see that kind of puzzle put together, it is why I love doing what I'm doing.
Yeah. So honestly, it seems like you already had the foundation and it was something like you lived through it. I mean, you are the gig who worked in the system, you know about where the system is failing. Now you're here to fix that system. And that's kind of revolutionary. And whoever actually listening to this episode, think about what problem you're facing and what world issues or socio-economic issues or crisis that you want to fix. Maybe AI is an answer to that. So love to know about your journey, Tamara. Thank you for sharing that with our listeners. And I'm going to move on to the next question, which is more related to the structural gap in credit scoring, something that you experienced right hand. So you have said traditional lending models are stuck in the 1950s, while the workforce has moved to gig work, fractional leadership, and AI-powered solopreneurship. What specifically is broken in how FICO and Duro-based models read someone's financial behavior, and what does MPWR see that they don't?
Yeah, and so Empower, I take out all the vowels. So MPWR stands
Mhm.
for Empower.
Mhm.
And what really, if we have to back up a little bit. So you mentioned a lot of things in that question, going back to the 1950s. Let's take a look at how the economy has changed. So in the 1950s, up until about a decade ago, people had one job, they had a mortgage or a long-term housing situation. People were more likely to have credit cards, right? So you have all these things that for a very long time were kind of held as true, which is one W-2, been in a job for a while, a mortgage or a long-term housing, and kind of a debt to income ratio, right? You've had credit cards or you have student loans. Now, the economy is really shifting. So, if you look at the statistics, you've got about half of the US workforce is either a gig worker, a creator, Gen Z, or thin filed borrower.
Correct.
That's a lot of people that don't fit that traditional mold. And so what I say is that there has to be there's now a shift that part of our economy is actually going to continue to grow. And so you have to have the financial services that fit that model. So now
Mhm.
we need to think about what's a new inclusive way to include everybody into the financial system and look at them holistically. And we have the data to do it. That's the key there. So how do we move outside of, the 1950s model, the one score, the one way of looking at people into a new multidimensional way of gathering data in a way that is safe, secure, and transparent so that more borrowers get pushed or pulled into the financial system? This is a win for the borrowers and this is a huge win for lenders, right? Figuring this out. So, if we kind of look at that's the first part of it. And then I think I'm sorry, what was your second part of that? Because that was a big loaded question that then I just went on a tangent answering.
No, I mean, it's just like what Empower is doing to kind of counter the traditional model.
Perfect. So when you look at that, what we
Mhm.
saw was the huge potential of AI to create a solution that allowed for more data points to come in to better
Mhm.
understand the borrower and allow the bank to make faster decisions. And so we created an underlying proprietary technology that allows for policy bound agents to do the whole life cycle of a loan from origination onboarding to underwriter packaging to
Mhm.
pre-collections risk mitigation. And what the agents do is they can pull in hundreds of different data points and they can create packages so that the underwriter can better understand the person instead of just relying on one score or several scores you don't necessarily understand where all the data is coming from, right? Some of our scoring systems are a little bit of black box systems. So instead of doing that, you bring in all the data points that you can in order to make a better decision. And then you put that in front of the underwriter in an easy to understand way so that they can sort through it and they can identify the most important information that they need to know in order to make a decision. And AI can do that really quick. And so that's what we developed. We developed a system that not only takes care of this new economy, but it also takes care of the traditional borrowers as well, so that banks have a way, and credit unions and alternative lenders and mortgage brokers and mortgage companies have a way to bring more people into the system. And so instead of saying no, they're able to say yes more often.
Well, that's actually fascinating. And I would say, like, being a data scientist or someone who actually worked in the risk assessment life insurance area, like, as you mentioned, that there's so many data points, and we have to bring those multidimensional modeling or data points into account, especially in a fact that where someone doesn't have like a 9 to 5 job or doesn't have a white collar job, but they do a lot of other stuff that doesn't fit into that traditional model category. And I believe the way our society is changing, especially the new generation, the Gen Z, I mean, they are actually doing more gig works and they don't want to kind of like work for someone. They don't want to be a solopreneur, especially in the AI era. I think there's an urge to become more of a solopreneur running their own business. And that is where
And
I
they want to be
guess
nomadic. They want to
Yes,
live in
exactly.
Lisbon and New York and Austin,
Yeah,
like
definitely. And that's where actually your AI model could actually take all those that particular demographic into account, making sure they're not getting left out just because the traditional banking services system still following 1950s credit risking model. So yeah, I mean, it's really interesting. And I would like to remind my listeners, like, in this show notes, I will share Tamara's LinkedIn profile. I'll share Empower AI's website and all the details. So feel free to reach out to her if you'd love to know more about her model and the AI agents that her company working on already built. So moving on to the next question, and this is something I would like to kind of like think more from a design standpoint. Like you said that the quiet part out is that we are letting AI make life-changing decisions without requiring it to explain itself. So at Empower, every agent action has to be explainable, auditable, and adjustable from day one because you're dealing with financial services data. I mean,
Mhm.
so now what does building explainable by design actually look like at the architectural level? And what do most fintech AI team get wrong by treating explainability as something you bolt on after the model works? So it's kind of like, if you just give me a little bit of rundown of how the architectural level it works, how Empowered is more transparent and explain what is going on behind the scene.
Absolutely. So we have AI do the work, not the decisions. So what we know is that AI is highly unpredictable, right? We know that the way that it is designed, it can be biased. And so that's why the EU says that AI in decisioning is high risk. Leveraging AI, especially large language models, to actually do decisioning is very risky. And you have to be able to explain why that decision was made or why a particular data was pulled in and not other data, right? So what we see is the valuable part is AI does the work and then we have deterministic models do the decisioning. And that
Mhm.
way everything is incredibly clear, right? The audit trail is there. You can in our system, we have two buttons. One is for the decisioning audit and the other is for the bias audit. You can get that right away. It's clear. You can give it to your, chief risk officer. You can give it to compliance. Nothing is left up to, oh my goodness, what happened, right? Your quote at the beginning, which I loved was data wasn't available. I forget exactly what it was, is
Mhm.
no longer an option
Yeah.
in the adverse action. Like that's yes, absolutely. It shouldn't be an option. We know exactly. And so even when decisions are being made inside of our platform, if a human is doing it, which we are incredibly big about humans in the loop. We believe that the human should be the last person that's making that decision on most decisions. And so when that happens, if there's something that differs from the recommendation, we have to have those inputs put into the system so that everything is seen clearly.
Yeah, love that. Especially like you mentioned, starting, when you answered this particular question that AI is not making the decision. I think that's the pivotal part here. I mean, you have to keep humans in the loop, especially when it comes to decision. You need an expert over there, whether that's where the underwriter is going to be there, right? I mean, no AI agent is going to replace an underwriter's skill sets. You still need a human. And I love that. I think that's exactly what for our listeners probably interested to know about how empower keeping humans in the loop, especially in the decision making process. So thank you for giving us the rundown, Tamara. I appreciate that. Now, moving on to the next question, that is something kind of like piggyback on that explainability factor. I wanted to kind of like talk a little bit about the regulatory aspect of the tool since it's a financial services AI agent. And when we are talking about financial services, a lot of different AI acts gonna come in. We're still kind of seeing that AI acts are getting evolved, year after year. So the CFPB has made clear that we lack sufficient information to provide a reason is no longer an acceptable adverse action notice. And especially the EU AI Act classifies credit worthiness assessment as high risk. So how is Empowered built to operate inside that regulatory reality rather than reacting to it after the fact? I mean,
Yeah.
kind of like, kind of making sure all the compliance check boxes are properly checked.
Yeah, well, one, the EU is also very much ahead in the AI regulations, and so if you're a company that is building global technology, then you look at the EU and you make sure that you're building according to those standards, right? Which we have done.
Uh-huh.
And one of the things which we agree with, like I mentioned, is AI and decisioning is high risk. So when I was doing my original work in ethical AI, we were digging into how models are made and how they can be manipulated is not the right word, but how they can be engineered to make certain decisions. And we all know this, the cat is out of the bag. Usually AI is very nice to you, right?
Mhm.
Like, so your AI is kind of meant to give you an answer, even if that answer is not true. And when it comes to financial decisions, that's just not acceptable. You can't have that. As incredible as AI is at so many things, right? Like I've got hundreds of agents that are working with for me right now. I love it. I am always in the loop because ultimately AI needs to be there to help you and assist and be, like a thought partner, but never to be your thoughts. And so with that and kind of my rant on why AI still isn't meant for being the decision maker, we use deterministic models for decisioning, which are very clear. They're policy bound. So you know that if a lender has this policy, the deterministic model matches that policy. And therefore, that's why it's clearly auditable, very transparent, and abides by policies.
Perfect. Thank you for kind of like sharing us with this detail, especially given the fact that Empower AI agent is kind of like living in that financial services territory. It's just super important to kind of understand how the compliance framework works, within the system. Now, moving on to, since you mentioned agent, so my next question is something around like agentic AI in a regulated environment. So especially in the lending processes, right? A wrong decision can end someone's access to capital. So, how do you design an agent to be fast and helpful while making it structurally impossible for it to operate outside policy?
So, our underlying technology, which we have a patent pending on, is really the magic there. And what I can say it does is it operates within buckets of information. And
Got
so,
it.
therefore, if it doesn't have the information, it can't give you an
Mhm.
answer. Therefore, it does not hallucinate and is highly accurate. With that, too, where we believe is agents should do the work. So, our agents do the work of bringing in information, doing communication, right? Agents are fantastic at communication and bringing in information and doing tasks. And so that's where we really leverage the agentic technology of action oriented agents that can be policy bound. That is the great spot for agents. The then deterministic model helps with the decisioning.
Perfect. Yeah, I do love the fact that you are still using deterministic models for that, because at the end of the day, like if I put my data scientist hat on, deterministic models is still the best way to go when it comes to just a deterministic prediction. AI won't need that, and it's not necessary in that case. And so I love that you are actually using a blend of LLM plus machine learning models to making those decisions. So thank
Well,
you, Tamara.
and what I can say is, then the AI agent within our platform,
Mhm,
you can ask the questions about the
mhm.
data. And so
Yeah,
therefore you're able to say, hey, what is the cash flow? What are the trends?
correct,
What are
correct.
we seeing outside that may be external pressures in order to make this decision? And you get this really great balance of speed and information.
No, I think that's the best way to do. I mean, like, especially if people who are actually listening to this episode, the blend of AI and LLM just giving you a quick summary and helping you with like getting results quickly with a backend system that has more probabilistic deterministic check to make sure the AI is not hallucinating is the best architectural framework, especially for an AI agent that's dealing with the financial data. So thank you, Tamara, and I appreciate giving us like a holistic overview of that. Moving on to my kind of like the last question, it was kind of related to the fairness and equity. You have drawn a distinction between AI's opportunity being efficiency versus equity and argued trust is what makes equity possible. How do you actually measure whether Empower system is expanding across rather than just automating the same execution banks have always made, but just faster? I mean, what is Empower doing different?
So we're doing different benchmarks on how many customers, the lenders that we're working with, we're bringing in before and how we're expanding that. And
Mhm.
we can see based on past denials and what we're able to do, how we're expanding access. So that's one thing that we are very much paying attention to. Our KPIs are expanding access. So higher acquisition rates, lowering risk and defaults, and cutting down manual work. So those are our top three that we measure right now.
All right, Tamara, this has been one of the most substantive conversations that I have had like in last few episodes. So thank you for your time. Before we conclude or wrap up this episode, I would like to ask one question, and that's I'm pretty sure all the listeners would love to know more about. Actually, there are two questions. First is, if there are gig workers or fractional leaders listening to this episode, what would be your advice to them, especially in the landscape of credit lending opportunities in next 10 years? Like, I know we don't have crystal ball, but what's your prediction looks like? And the second, if any of my listeners would love to continue this conversation with you, how would they reach out to you?
So, for the first question, I really do think that the landscape is going to change for gig workers because right now and creators and, anyone who doesn't have the traditional 9 to 5 job, right? The traditional W-2. It is such a growing community and part of our economy that there are a lot of people looking to find solutions. So that's the exciting part. The advice to them is just start looking for the solutions because they are starting to pop up. And ask the questions, right? To your
Yep.
financial institutions, ask the question, how does this serve me? I'd like more services. How can you better serve me? Right? Be that advocate for yourself. If you are looking to connect with me, which I would absolutely love you to do, LinkedIn, DM me, send me a message. I answer all of them. I've been a bit slow because I've been in a bunch of tech weeks, but I will always get back to you.
Thanks, Tamara. And just want to remind our listeners, I will share Tamara's LinkedIn profile link and any other relevant information in the show notes. So please check that out. And if you work in fintech, lending, or AI governance, this is the right episode to send you your compliance team and let them dive deep into Empower AI. I'm Sam Dev. Please subscribe to my channel on YouTube, Podbean, Spotify, Apple Podcast, as well as on iHeartRadio. And I'll see you in the next one. Thank you.